Welcome to a Purple Chips web update. I'm John Schwinghammer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. The information contained in this presentation is based on the criteria of the Purple Chips model and is not intended to be a solicitation to buy or sell securities or investment advice. This presentation has not been approved by the author's employer. The information contained herein is believed to be accurate but cannot be guaranteed. Stocks can be risky and you should consult a professional before investing in the stock market. Today, in our webinar, I'd like to discuss the general notion of recycling profits and how that can be very advantageous. And some of the key points, recycling your capital at a lower risk. That's why Purple Chips is very efficient. And I want to give you an example of where we sold Pepsi about 4 months ago. We took the profit on Pepsi, recycled it, and bought Aflac, AFL. And that same capital over the space of 7 months has generated 27%. So we effectively moved out of Pepsi, took a profit of about 9%, moved that into Aflac, and we are currently up 18%. And this is all, of course, before fees, which would not make that much of a difference, but it's worth noting. So let's look at the charts here. This is the example of Pepsi, and I'll just show you very quickly. When we bought Pepsi, we were in this zone right here, and we had paid 63.25. And then shortly thereafter, a signal came up that Aflac was undervalued. That was in May. We originally bought Pepsi in March, and Pepsi had risen to about this level here. Actually, it was just slightly higher than that. It was on 68.90, where we took the profit. It was up 9%. The only reason we moved out of Pepsi was because Aflac was a top 25 Purple Chip. And so we felt that we could take the profit, recycle it by putting it into a better quality stock, which was Aflac. And by doing this, we effectively recycled the capital and made more money. Now, let's take a look at the Aflac chart, and you'll see exactly what I'm talking about. Here you've got Aflac. And I'll just show you when we got into Aflac, it was right here, and that coincided at $41. That's where we bought Aflac, and that was in May of 2012. And currently today, of course, we're up here. We're at the 48.50 mark as compared to 41. And so we are up 18% on Aflac, and we realized a profit of 9% on Pepsi. So therefore, we made 27% over a seven-month period, which is pretty good. So that's the whole notion behind Purple Chips, is that when you take a profit on something, you recycle that money, and it's very efficient because you're always moving into the next best opportunity. And certainly any time that we get a signal on a top 25 Purple Chip, we always give a preference to those. And so we will take profits on something that's of lesser quality, something that's not in the top 25, so that we can put the capital to work in the top 25. So that's all for today. I'm John Schwinghammer, the author of Purple Chips, and thank you for watching.